Hi everyone. I'm Amanda. I am Aurus content writer and I'll guide the conversation. We are here with John and Adam from DeFactor. So guys, could you start by introducing yourselves?
Of course, I'll start. My name's Jonathan Boyd from Aurus. I'm the Director of Institutional Markets and happy to be here with you today.
Mm-hmm.
Yeah,
Hey Adam.
hi there. I'm Adam Bouktilla. I'm one of the co-founders of DeFactor, and we are a real-world asset tokenization ecosystem. So, absolutely great to be here.
Nice. Okay, so naturally I work for Arrow, so I'm already familiar with them. Can you tell me a little bit more about DeFactor?
Yeah, for sure. So, as I mentioned, we're all about RWAs. Okay, so when we say real-world
Mm-hmm.
assets, what are we talking about? So, we have on one side a technology toolkit. So, essentially, we can help with the lending and borrowing of assets using our pools technology. We can also help with community engagement using our Engage tool. And we also have asset tokenization too. So, you'll hear me a lot of the times talking about the RWA toolkit. And that's what I mean when I
Uh-huh.
say that. So, with DeFactor, we're a technology provider. We have our Factor token on the market, and I'm glad to say our community is growing and growing. So,
Nice. Very good to hear that. So there are a few overlaps between Arus and DeFactor. So we both specialize in real world assets. And that's nice because I hear that real world assets are now going bullish. So what do you think about that specifically and the outlook of RWAs in DeFi, in your opinion?
yeah,
Well,
you go ahead, John.
should I jump in
Yeah,
quickly?
please.
Yeah, I mean, I think you look at the trends in the markets, and each kind of cycle has different kind of trends, or at least it depends if you look at a cycle or years. But real world assets have been around. You use the term RWA or real world asset, as Adam mentioned. It's a nice hashtag, RWA, so easy to use in kind of communications and on Twitter, etc. But really, it's kind of just saying these are all the assets that we're used to, right? In traditional finance, bonds, stocks, derivatives, gold, silver, platinum, right? They all exist in the traditional marketplace. And if you look at the trend now, going forwards, is taking these assets that already exist and making them more mobile, right? Using blockchain technology to enhance the utility of them, but also to kind of improve their settlement times, be able to trade them 24/7, more access for more users to actually be able to buy these assets and own these assets, whether it's cross border, whether it's because I only have $100 to buy it. If I fractionalize, a kilogram gold bar, for example, I can now buy a smaller piece of that gold bar rather than having to have $60,000 to buy the whole gold bar, or as an example. So you're also then seeing, why is it kind of bullish? Well, I think just from a technology point of view, it is enhancing the utility of all these real world assets and the ability to access new investors and new users and just the utility of it. But also from a macro perspective, you've got a lot of factors in the market now which are very bearish. Massive printing of money over the last 5, 10 years, record, it's in the trillions. I can't even imagine what $1 trillion looks like in a room. And it's multiple trillions having been printed. There is wars going on, right? There are interesting leaders coming into place and have been over the last 5, 10 years, right? Who are maybe a little bit more, to the right and a little bit more controversial, right? In very developed economies. So a lot of this all plays into quite a bearish scenario, or if I say bearish, what does that mean? Maybe more a negative scenario for markets. And real world assets, particularly like gold, are good to protect against uncertainty in markets. So yes, real world assets from a technology point of view coming on chain is bullish, but I think particularly for gold and silver perhaps as well, can protect a lot of that uncertainty, and hence why investors are quite bullish on those assets now going forwards.
Yeah, I think that's very well said. I agree with everything you said there, John. I think another thing which is interesting, people keep kind of asking, RWA is the hype, why is it hype now? But I got involved in this space actually 6 years ago, right? And 6 years ago, this was what was being talked about, right? It was fractional ownership, it was real estate tokenization. At that stage, the technology just hadn't caught up, right? They weren't all of these various L2s. There was still a lot of issues around the technology. When I say a lot of issues, I guess I mean there weren't as many choices, right? So now when people ask me about RWA tokenization, I say it's not actually a technology problem anymore. It's a user experience problem. It's an onboarding problem. People still need to be aware of what's possible, but I think it's happening now. It's coming full circle. So you have financial institutions have investigated this space now for years, not months, right? So it's not so new for them. So I think you're seeing on the bigger side some players really looking into how they can leverage it, but also just at a community or individual country level, there's benefits that will, I guess, differ depending on where you are, right? In certain places in the world, as you mentioned, your currency is getting devalued. Or in other places, there's just massive cost of living crisis, etc., etc. There's so many factors, as you mentioned, that I think are creating a little bit of a perfect storm for this RWA tokenization movement or real world asset tokenization movement. And I think you're going to see so many implementations of this. Of course, we're here to talk about gold and precious metals. And from my side, I think when you and I first met, John, it was what I said. I'm a collector of precious metals, right? I buy silver, I invest in gold anytime that I can. But why do I do that? I do it because, that's going to go to my daughter. That's going to stay in my family. I don't buy it to trade, I buy it to hold. Now, what does it mean now with tokenization? It opens out a whole new layer of utility. I can actually, do something with this gold that is being, just sitting somewhere, or so these are the things that really get me excited about it. And I think, not to kind of ramble on, I guess we'll get to this too, but traditionally when you saw a lot of DeFi, you'd see there was huge, hype around people trying to borrow crypto assets to take other crypto assets, and there was massive volatility on both sides. When you think about RWA tokenization or precious metals, etc., there's a big benefit here. The volatility is not necessarily as much as it would be with some of these cryptocurrencies. And as you say, people can trust the asset. So if they know that this is a gold backed asset, it's much easier to be able to to trust and get involved in that. So I'll pause for now.
Yeah, I love that. I can tell that you both are not only very knowledgeable about RWAs, but also passionate, which makes me excited to ask about the partnership. Can you tell me about the partnership between DeFactor and Aurus?
Yeah. So this partnership we're quite excited about, because I think if I talk for Aurus, we are really focused on anyone. You can buy today. You can buy gold. You can, right? Sometimes it's quite difficult depending on the amount you want. Also, who do you trust? There's different brokers, different premiums, different types of gold, different types of coins, different types of bars, all sorts of decisions you need to make just to get access to gold, right? And to the value that gold brings you. But if you take it back a step from that, we say you can do that already, right? You can also tokenize gold, and you can just buy it and hold it, right? You can do that with physical gold too. Here's what people call going long, right? I'm holding this for the long term. And if I take tokenization of gold now, you can now build in more utility, right? Because gold has value. And by tokenizing it, you're now bringing it into a digital marketplace. You're now bringing it into an innovative financial system, one that is ripe for innovation, one that can now be interconnected across borders, right? Can be interconnected across platforms a lot more simply and easier. And so what does that mean it means that we can now make gold do many different things. You can now earn an interest on it. You can earn a yield on it. You can use it as collateral.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
In lending and borrowing. So that leads me into the partnership between DeFactor and Aurus. DeFactor has similarities with us, focused on real world assets. We're focused on a subsection of the real world asset sector, which is precious metals. So this partnership is going to focus on bringing lending and borrowing on your T-Gold tokens. So you can then deposit your T-Gold tokens into a lending and borrowing vault on DeFactor's platform, which is audited and secured. And you can then now borrow a certain amount of USDC, which is a US dollar stablecoin, against the value of your T-Gold tokens. So that is what this partnership is starting off with. And as we go forwards and as we see, how it plays out and how successful it is, we will add further iterations to this as we progress this partnership together. But that's the gist of it for now.
Okay, sounds amazing. So can you explain a little bit more about lending and borrowing in DeFi, and also what are the advantages of crypto lending over traditional finance?
Yeah, for sure. I can jump in on that one. So I guess when talking about DeFi lending and borrowing, it's quite similar in terms of the roles that would exist in traditional, right? You're going to have borrowers on one side, you're going to have lenders, you're going to have a lending pool. What makes this interesting, and I think as John touched on, is that with the different types of collateral, so in this case we're talking about T-Gold, so you having some T-Gold, you're able to lock that into a vault or into a pool, and you're able to take a loan based on the value of that gold or how much has been locked up on that. And there's a whole host of advantages here. I think we could talk for a long time. The reason why it's important to split it between borrowers and lenders, because there is a distinct difference, right? So for the borrowers, of course, it's getting them some better financial access. Maybe it's giving some flexibility on their collateral. There's less, credit dependency things. If you think about somebody who's from an individual or a business who's from a developing country, maybe they don't have an extensive credit history to be able to get access to capital. It can significantly limit what they could do, right? Again, there's quicker loan processing you could think of as well, because if somebody's able to verify the collateral that's in a pool, it then builds trust where somebody can say, no, I will, on the other side, lend into this pool because I trust that the collateral that's there, if in the event that the borrower doesn't pay back, the collateral will be liquidated and everybody's fine on that side. That's why T-Gold or tokenized gold is very important for this use case. That's why we're so excited about it, because if we're talking about, you'll hear kind of interchangeably people saying DeFi pools or DeFi lending pools. And I do want to make a distinct difference, right? This is not two volatile tokens on one side. You're not locking up, I don't know, Atom coin in exchange for John coin, and both of those could jump 50, 60% on a day. This is not what we're talking about here. So that's why it is important to make that distinction. But in terms of talking about benefits, we could talk for a long time. I do just want to go back a little bit on the partnership and why it's important for us. So as I mentioned, having this RWA toolkit, that's one thing, right? As I mentioned, it's all great to have tech, but we need to be able to demonstrate and showcase how these different asset classes can benefit from using these. So not just liquidity pools, as I mentioned, but there's more things that we can talk about and build up towards in the future, which I'm very excited about. In this first iteration, as we say, what we're trying to do is prove the model that on one side we have this tokenized gold, T-Gold. On the other side, we have the DeFactor technical infrastructure. So how do we increase that utility? And that's really something we're excited about. I think you can tell by how we're speaking, but yeah, long may it continue. It's been a great ride so far.
Yeah, I mean, I'll add something there. Thanks, Adam. Is just very simply, so to explain DeFi terms and kind of a lot of crypto nuanced things we take for granted being in the industry, to explain it quite simply is, if you're lending, then you have some cryptocurrency, you have digital assets, like T-Gold, right, for example. And if you're not using them now, they're just sort of sitting idle or in a wallet, you can actually lend them to DeFactor's real world asset platform, right? They're safely secured, in a digital vault, if I may. And then for doing this, in a typical lending and borrowing system, you would be able to earn a yield for lending those assets, right? By lending, you earn a yield, and just like depositing money in a bank, you deposit it for a certain period of time, and you can actually earn some interest from it. As a borrower, right, if I need some extra cash or capital, or digital assets, for example, but I don't want to sell, right, the crypto I'm holding or the T gold tokens I'm holding now for a number of reasons, right? I might want to hold it long term, as Adam mentioned, so I don't actually want to sell it now. I may have got in at a good price, or I just don't want to sell it. And potentially tax implications, because if I sell it now, I may realize capital gains on that, and I don't want to now pay that tax. So if I've got a way of getting extra cash by still holding these assets, this is a way you can do that, right? So you can actually borrow against this by putting your T-gold down as collateral, right? Something valuable you own as surety for the loan, excuse me, and you'll get some extra cash back, right? And you can do whatever you want with it. Pay the garden boy, get some groceries, make other investments, right? Buy other assets, right? It's up to you. And for, being able to take advantage of the service, you pay an interest, you pay a fee, right? And in DeFi lending and borrowing, part of that fee you pay as the borrower goes to the lender. So that's kind of how the circle joins at the end of the day.
Okay, thank you. All right, so I know we have been tackling the answer to this question throughout this conversation, but I do want to ask this directly. Why is stick gold as collateral especially a good idea?
Yeah, I think I could jump in there for that one. I guess before I talked a lot about the benefits of lending pools or pools and why it's important, there's also some risks involved, right? And one of those risks would be, as I mentioned already, the collateral volatility. So if you lock something up into a pool, how are you to say that that is going to retain or hold its value above certain thresholds? There's also, liquidation concerns. If somebody, again, locks a certain asset type into a pool, that liquidation process, if they don't pay back, can be cumbersome, especially with certain real world assets. With tokenized gold, it actually is a really, really nice use case for this, right? Because, again, as I mentioned on the volatility side, it's not nearly as volatile as certain other asset classes. And again, on the liquidation process, if somebody doesn't pay back or there's an issue on that side, you will have a long list of people that are ready to purchase gold because it has a spot price that's global, right? So it's on one side, all of that is why I'm super excited about it. And again, to say, why would you not just sell your gold? I think we've talked about it a little bit. It's like, maybe I don't want to, or maybe I don't want to have, tax implications or certain things. Again, for me, I'm a long-term holder, so I'm probably never going to sell my gold. But maybe I want to make it work for me, right? So this is something that's very exciting for me.
Yeah, absolutely. Okay, so I have a question for both of you. I'd love to hear about your plans for the future. So, both to Aurus and to DeFactor, what's the game plan for staying relevant and growing today's DeFi world?
Yeah. So, good question. What are we looking at the future? There's a number of things, and I think there's a few key verticals. And what we're doing now with DeFactor is, adding utility in, one of the verticals Aurus is looking to be relevant in and grow in, which is decentralized finance. One of the key utilities you can do is create lending and borrowing. Potentially, we'll look at some partnering up with some perpetual exchanges. Where we can start to work with some derivatives on gold, maybe some futures contracts, and things like that. All of this is really possible once you've got deeper liquidity across your tokens. Like any market, it becomes more vibrant. You can build more products upon it. Based on how deep the liquidity can be, and that would obviously attract more market participants as well. So it's kind of a self-fulfilling prophecy. So that's one thing we'll be looking to do. deeper liquidity, more partnerships with guys like DeFactor, with lending and borrowing platforms, with other DeFi platforms, and having liquidity sources across multiple venues. That's in decentralized finance. If we look at, and obviously staying on trend with the real world asset narrative, because I think we're in the right place at the right time. But as Adam says, he goes back 6 years, speaking about real world assets and that trend, bringing assets on chain, as people talk about, right? Creating, digital versions of them. So, that goes back some time, but now you're seeing it catch up. We've had all the speculation of the BS meme coins, and okay, people make money, right? I'm not saying you don't make money from these things, but it's kind of like a game of musical chairs, right? The last person who doesn't, sit down in time loses out. They generally call you the bag holder. So, there's a lot of that's come. Meme coins, DeFi summer, all sorts of trends and narratives. Now it's real world asset time. Now it's time to say, okay, this technology has grown up somewhat. Traditional finance understands it a little bit better. Their systems are a little bit more, because they're like a big ship. It takes time for them to turn and to change their systems, because they're very big and have been established over a long period of time. So now traditional finance is kind of ready to integrate blockchain technology. Which means that this real world asset trend is going to continue. So we want to stay on trend and ride that wave now, with all the hard work that's gone in over the last 4 or 5 years. And then there's other cool things you can do, which we really want to innovate with. And ultimately gold is money. Ultimately gold has value. Ultimately gold is a stable form of wealth. And if you take that, and you take any kind of ideas that you can cook up in your brain and with other partners, for example, digital collectibles, right, with gold backing. Now you're bringing in a stable floor price. Floor prices of digital collectibles has always been an issue, because there hasn't been anything tangible behind it. So there's some cool things we can do there in that space. I'm not the biggest gamer, but I have gamed before, and I'm sure people listening would be like, there's so many gamers out there, right? Billions and billions of them, and it's $100 billion a year, market. Now, if you just think about it, there's gold all over games. It's just not real tangible gold. It's kind of fake digital gold. So there's a lot of ways we're looking to kind of innovate in these spaces too, to not only stay relevant, but to keep pushing the needle, to keep seeing where we can innovate and where we can disrupt. So that's a little bit of how we look into the future.
Yeah, for sure. And that's what makes it fun for me, right? It's even when we had our first workshops, you could see from both sides, both teams were innovating, coming up, hey, could we do this? Or what about if we did this? And that's where I really it gets the juices flowing, right? Because if you start from a small scale, which is what we will be doing, we'll open up a beta pool, we'll make sure that everything's working great, and we'll test it back and forth. Then we can test all different types of, pool types. The good thing about the DeFactor toolkit is it's configurable, right? So we can test different pool durations, sizes, etc., etc. So both for the lender and the borrower, we can innovate and iterate, and that's what we will be doing all the time. So you'll see us starting small, telling the story. I do feel like, although there is a lot of hype about real world assets, we are still in that storytelling phase for a lot of people. They still need to conceptualize it and kind of say, well, what's possible? What do you mean by RWA tokenization or bringing DeFi to RWA? What does that mean? So we're still in that phase, and hopefully together we can tell a very compelling story and build from there. So I think the sky's the limit, but I am a realist that I like to kind of take things stage by stage. So for now, I'm hugely excited about the launch of our first pool. I've got no doubt that it won't be our only pool, and we'll kind of keep going and building from there. So yeah, very exciting times.
No, it is. And just to be clear on that, so this initial launch with DeFactor and Aurus, we will keep it simple. So you can use your T-Gold tokens. You can go and buy them first, or if you have T-Gold, right, on Polygon, right, so on the Polygon chain. What you'll be able to do is deposit your T-Gold tokens and take a loan in USDC, US dollar stablecoin, against those T-Gold tokens. We're keeping the lending side closed for now in this beta launch. We're going to see how that goes, as Adam says, and then that would be part of kind of the next steps and next phases, is to open up, the lending side on USDC as well. But yeah, watch for more announcements on that front.
Mm-hmm. Sounds amazing. And I suppose people are wondering, when can we expect the beta launch?
Good question. Always a good question.
Always a good question. And I would say a matter of weeks. How's about that? Because we were just waiting for the final audit report on our pools. Happy to report that is now in. We scored a 98, so a very, very good score on the pool. And that's what's very important. Security here is paramount. You have to make sure that we're doing this in the correct way. And yeah, all of the boxes have been checked. So I would say stay tuned. In the next couple of weeks, you'll see the beta launch of our first pool. And as John said, we'll be building from there. Let's tell this story, make sure that it works, build some excitement, and hopefully both of our communities can eventually get involved. And that's really what we'd like here.
Yeah, absolutely. I must say I'm very compelled by the stories you're telling and the ideas you're cooking, and I can't wait to see where this is leading. So excited, and it was really nice talking to both of you guys. Thank you.
Thank you very much, everyone. Great to be here.
John, you are muted.
I think you could be muted, John. Yeah.
I am muted, sorry. I just wanted to say, to finish there, thanks for your time. And if you want more details on, how the gold is tokenized, where it's, stored, where it's who the custodians are, whatever kind of extra info you need, please go and look at, the Aurus website or DeFactor's website. DeFactor has a great lending and borrowing toolkit. If you just, a newbie to this, as we all are, we're all newbies at some point. So, any question is a good one. There's a lot of material on the website. Go and follow the channels that we have, the social media channels, read the blogs. And if not, tune in for the next spaces that we host together.
Yeah, absolutely. And also feel free to DM us, ask questions directly. We're always happy to reply to them. And we are also considering launching, hosting a second Twitter space where we can ask questions. So ask me anything and let us know if you'd like that. Feel free to send your questions over, and we keep in touch. Again, thank you so much, guys.
Thank you.
Bye.
Thank you for having us. Thank you. Bye-bye.